were just talking, just quickly here, we talked about natural gas, and you just jumped in. We're talking in Canada, which is symbol ECA, and I don't know if this is one you've traded, Canadian company there. You got any thoughts, just from technically speaking, Nick, on in Canada ECA, and how you doing this morning?
I'm doing fantastic by yourselves.
We're
You,
doing good. We're throwing a low price Canadian stock in Nick. Let's see what he can come by. I love throwing these symbols at him and getting his random opinion on it. ECA, Nick.
I'll put my Kramer hat on. Fast fire, whatever he calls it. Well, obviously, it's not a pretty chart since it's heading down. But it did have some sort of a breakout around 1150 not too long ago. So now it's challenged because it's reached the area where there was a transition. You see that open gap that happened somewhere in November.
Hmm.
So this area below the open gap happened pretty quickly, so it didn't have a chance to trade it in the last 12 months. And so this is somewhat of a resistance area, and I don't know. I wouldn't be too hopeful here without news. Let me see if the open interest can tell me anything about it. ECA, right?
While you're
Uh,
looking, Nick, I got a level that sticks out really significant to me here. Three of the last four highs in the issue between 14.15 and 14.18. So if you're trying to buy it on weakness, go right ahead. If you want to buy it on strength, it's not going anywhere until it gets through that 14.18 level.
14 is where the market wants it to be at least for this week's contract, this month's contract that ends this week. As far as the open interest is concerned, going out to June, it might see some resistance at 14 and then again at 15 and some decent support at 14. So if you want to take a shot on the long side, it's not that crazy given that the open interest may support you on that theory.
Okay. All right, Nick. General market thoughts here. Got back over 2100 again. I know that's kind of been a bogey for you. How you playing it?
Iron condors, because we've had a stalemate for so long, and generating income by selling risk outside of the range that we're playing is probably the best way, in my opinion. So it's kind of a boring trade, and I'm dead bored. But my
you like
return,
boring though. That's
I
Boring.
what you
do,
like.
If
I
you're
do. I'm
making
all,
money, it's not boring.
And he likes boring. That's how he
I
makes
do
his
like
money off
boring.
boring.
Exactly, boring is beautiful. And the returns I've already beat last year's S&P with boring trades, long distance
Nice.
trades. I haven't had any issues yet because I'm avoiding the current week, and if I do play it, I close it early. I'm always asked, do you play the weeklies? Yes, but not necessarily in the same week. So I may do next week already and get out of this week's. Why do I want the drama of this week? I can do the same thing using next week's premiums, only wider and bigger buffers from current prices, so less chance of a blow up. And it's a slower mover than this week, so you can react to whooshes like this morning. People want to get it, make it exciting. People are challenged to squeeze out every penny out of every trade, and that's where you get in trouble. Oh, I know I can expire it for maximum gain, and boom, you get in trouble. I recognize some of the names in the room today, and that's pretty happy because they're members and they they've heard this like over and over. I say it over. They must be bored to death out of it, but it pays the bills. It literally
That's
pays the bills.
Hey,
what
Nick,
it's all about.
yeah, Nick,
Yep.
I want to talk to you a little bit of strategy here, and we definitely could tell that you're versed in the technicals and the technical analysis that you use. Options can be very complicated with the thetas and the gammas and the deltas and the vegas or whatever. How do you proportion it between your feel, which is very good for the market, the technical analysis that you use, and then all those fancy components
Okay.
of options, thetas and gammas and
That's beautiful.
betas.
That's a beautiful question because I'm a fundamental trader. I am not a technical trader. In fact, if a technical analyst comes and sees my charts, would laugh his butt off because it's a science for them. I mean, they have so many they're so accurate. Me, I use a crayon, but the spirit is
Nice. I
there.
like the
So
crayon technical
it,
analysis
it,
theory.
it doesn't lie. It simplifies things. It forces you to look at things differently. So as far as what I do, fundamentally, I have to set up all of my trades based on the fundamentals. And that starts with the macro. What does the world look like? And then as if I gather an understanding from that, then I go, okay, what's the micro look like? And then I focus on the tickers I want to trade. And how does this company look in the globe? Because even if I love Apple, and the global market is going to heck, I'm not going to invest in Apple. I'm going to keep cash. So I need to understand the macro and then the micro, and it's all fundamentally based. And before I place any trade, I go to the technicals like a consultant. Okay, here's my opinion. What do you think, technicals? And if they agree with me, if they flash a warning sign, you better wait a couple of days, I see this or I see that, then I wait. I don't troll the charts for trades, which a lot of people do. I mean, many platforms have built-in pattern recognition software where they tell you, here's what we see. We see a harami here. We see a head and shoulders there, inverse this and that. And then they set up trades. They might work out, but that's not me.
Okay, so you start with the macros here in the overall market. Nick, what are your thoughts here on the overall market here? Because we have got up to this 2100 area. We failed so many times. We've got bonds getting hit here hard in the last couple of weeks. Gold catching a little bit of a bid. Crude's pulled off a little bit from its highs here. But with this overall market selling off here, at least today, are you concerned here that eventually you might be due for a correction here in the overall market?
Well, we are due for something, and we've had this stalemate forever, it seems like.
Hmm.
And usually when you gather so much energy in one spot, it tends to break one way or another. They overshoot. If they want to break up, they've done that at every century mark. Like at the 1900s, we stalled, and then boom, broke out in a big way. At the 2000s, same stall, broke out in a big way. 2100, we're not. We have had a magnet at 2100 for a long time, and we have had support below and resistance above. That's why the iron condors play has played out. And I will do that until I no longer see that. And even this week, I still see that, 2100 and then support below and resistance above. So I keep trying that trade. I'm more heavily short than long, but long distance. So I'm leaving room for more upside. I don't expect a huge downside, but it is a possibility that we overshoot because they say that the bond market is smarter than the equity markets. I don't know about smarter, but it's definitely bigger. So it's the big brother that can bully the little brother to do whatever it wants. So if there's a tizzy in the bond market, there has to be something that goes on in the equity markets. On Friday, last week, I should say, I heard a lot of experts come out and say, actually, one particular expert, I can't remember his name, but he said, oh, I expect, a breakout in the equity markets, and then he said, we have a bubble in the bond markets. Like, how could you say those two things in one paragraph?
Right.
If there's a bubble that's ready to burst in the bond market, you have to be afraid about your money in the equity markets because you don't know how it's going to go. It could go up or down. So it's concerning, but you have to be ready for it.
Nick, you mentioned the term iron condor a couple times. You often mention it on the show. Some of our new listeners might not be familiar with that. Can you just explain that strategy, the iron condor?
Yep, it's very easy. It's basically you figure out a range where prices are trading. Let's say the 2100 SPX. Then you're comfortable that we're not going to breach 2050 on the downside or 2150 on the upside. I'm simplifying things. Don't use those levels as trade alerts. And I sell risk at the 2050, meaning I'll do a credit put spread, which is a bullish trade. For it to be successful, I require the SPX to expire above 2050 on Friday morning. The settlement price is Friday morning. And if that's the case, then I keep the money I collected for selling the premium down there. And conversely, I do the same opposite thing at 2150. So if I collect 50 cents below and 50 cents above, I collect $1 for a total risk of $4. So the yield is well over 20% after fees for 1 week worth of trade. People say, oh, you're only collecting 50 cents. You can lose $4.50. Yes, I could. But it's an accident I can see coming, and I can get out before it happens. If I leave time on the clock, so I don't pressure myself with like 2 hours left on the trade. And if you think about it that way, yes, it sounds kind of like, 50 cents for 450, but the yield is 20%. I mean, last year, all exuberant last year, it was 13% on the S&P, and here you are collecting 20% in 1 week.
And you can make money when the market goes nowhere. It's ideal for it to go nowhere.
That's
here,
what you
so,
want. Yeah,
yeah.
You want nothing to happen. If nothing happens, if the market just meanders here, a couple dollars up, couple dollars down, tick tock, and then suddenly the premium goes 50 to 20, then you buy it back. You close the bet. You don't take the 20%, you take 10%. Big deal. So a lot of people want to squeeze every dollar out of every trade because they look at their statement. Oh my gosh, I gave up so much money on fees. Yes, but you're making money. You're making a little bit less money but you're still making money if you close the trades early. I learned that if you close the trades early, you take control over the portfolio, and you give up some money, you leave money on the table, and in hindsight, it's not the perfect trade to do, but it's the right thing to do, and it should be done every time.
Hey, Nick, we got a great discussion going. And Dennis, I hope you follow through on your theory here of buying Yahoo because Yahoo is now trading up 47 cents. You also have Baba here trading up 38 cents with a lot of red on the screen. Now, obviously, you heard about the Verizon AOL deal here. And I was talking with Dennis about possible, sympathy plays. Really not much out there like AOL. And he immediately said Yahoo. And at the time, Yahoo was trading up. Baba was in the red. Now Baba's green. Yahoo's green by 47 cents. Really going against the market here. Yahoo, let's first, the direct question was, is Baba a buy here? And that's coming from Max. So tough question here, and I put out a lot of other things about it. But what's your take on Alibaba? I know you had been a bull, kind of threw in the towel there when it took out the $80 level. What's your strategy now with Alibaba?
I stepped away from it. I wanted to hear a little bit more from the company. My theory on Baba from the beginning was it's a no-brainer long, kind of like Google. But then since then, there have been issues with communication. But recently, apparently, the markets like it. Plus, they might be trading to China because every market was down 1 to 2% this morning or overnight, I should say, and China market is up. So, in my opinion, there's a China stock bubble. And recently, somebody said, some expert on TV, I think it was Kramer, said that this is going to translate in growth in China. I don't know if it will. If I was a big money person in China, why would I tie up my money in actual physical expansion where I can triple my money in the stock market in 2 weeks? So it's going to be a financial thing. So when does the bubble burst in China is the fear on Alibaba and how Alibaba goes, Yahoo goes. But speaking of Yahoo, I think it has open interest this week that actually can guide some traders. 45 this week looks to be the point of interest. So I don't think it's going to break above 45 by much, and it has support at 45. So it might be the magnet that people are driving the prices to. So it might be worth a shot on the upside until that point. Or at least if I'm long it, I'm not too worried because of that fact.
One thing I just wanted to add here on the Yahoo Alibaba is obviously Yahoo trades off of the Alibaba price. But if I was putting my money to work, and I don't own either of these stocks here, I had a small position in Baba, which I sold there just a few days ago after the earnings pop. But if I wanted to own one of these, I probably would pick on Yahoo because Yahoo's almost valued at zero when you consider its Alibaba position. And now you just see AOL all of a sudden get taken over for $4.5 billion. It might be something there that Yahoo actually has some residual value in the actual company itself. And I think you're seeing that happen here a little bit this morning, even.
But that's what everybody's saying. And when everybody's saying the same thing, I tend to not get too excited about that
True.
trade. Like a couple of weeks, like last week, I think everybody was so sure that, bonds were dead, and then the next day bonds rally. And so it's just everybody says exactly what he just said. And
They've
so
been
maybe,
saying it, Nick, but the one thing different here is today is we just saw AOL get acquired for a 20% premium, which, I
yeah.
didn't think there was much there at all. So I just wonder if, and I'm watching the pre-market action and some people are saying, hey, maybe, this is what kickstarts that. So
The 45 line I mentioned would probably make it a breakout area because if you look at and connect all the lower highs that it's made in the past 3 months, just before the big debacle on 2 earnings ago, breaking 45, reaching 45 would break that lower high trend. So maybe it will invite more buyers technically. So that's always something to look for. And then maybe 47 would be in sight. That's my thought on Yahoo. So like you said, it's probably worth a shot on the long side if I were to pick longs. However, today is pretty tough.
yeah,
But
yeah.
if it does survive
Chasing today too.
and if it does show good strength today, then if the markets stabilize and go up, that is a pretty good lottery ticket.
Okay, just going
Yeah.
back to the Iron Condor question out of the chat. Is low vol good for selling Iron Condors?
Low volatility or low volume? I'm going to go with low volatility.
Yep.
Low volatility, it's always a question, but volatility is low. Why are you selling risk? I
Yeah.
don't care. If I'm collecting my 50 cents in low volatility or high volatility, in high volatility, that means I'm further away from current price. In low volatility, that means
Right.
I'm a little closer. So in either case, I'm being rewarded for my. Here's the thing. Everybody's so enamored, or oh my God, delta this and theta that. Think of it as a coin flip. Really, that's where it all starts. If you buy or sell an option at the money, it's a coin flip. That's why you get paid about 50% of what it's worth if it's a spread, because you have a 50-50 shot at winning. They're not idiots. They're going to give you as much risk as it's worth. So the closer to current price, the higher the money, and the more likely it's going to work out. You're going to get rewarded or not rewarded, depends if you're buying or selling. So work back from that. For me, coin flip is unacceptable. What is acceptable to you? 70% chance of success, so you go out one, or how far out you want to go from current price to you reduce the premium you're collecting, but you increase your chances of making money. So risk is really twofold. How much money is at stake? How much money can I lose? That's number one. What are the chances of me losing? That's really the important one. The first question you answer, and then you set, then you forget, and then you have to manage the second part, which is managing risk. Really, not the money you lose, but how likely to lose. So people forget that. For me, I'm conservative. So I take smaller premium, further away from price, so I don't have to worry about it.
We're on the line with Nic Chahine. He's an options expert, Marketfy Maven, author of Create Income with Option Spread. Nick, we only have a few minutes left here, so I'd like to just go rapid fire on a few issues here, and
Yep.
just real quick, and we'll throw a tough one at you for you here. Netflix.
Oh my God. Yeah, while I'm pulling up Netflix, I'd like to talk about Taser. You guys mentioned that.
Sure, go ahead.
Yep.
Cameras. Why aren't they not mentioned as competitors to GoPros?
Oh,
I'm just saying.
that's a good point.
Yeah. Netflix. Um, I wouldn't short that. It's a huge breakout on top of breakout
Yeah.
on top of
Again.
breakout, gap after gap, and this breakout here at 589 is a technical breakout from if you connect the high, the recent two highs. So, man, I would not short that. It's too hot to short, and it's too high for me to chase. But the potential is there. They have growth everywhere. Apparently, yesterday I read the piece about shifting ad dollars. All this is pro Netflix. So I would not butt heads with that. And if I had money to put on the long side for a lottery ticket, I can't give it a lot of money, but sure, it's exciting stock. So it's too hot to short for me, and for me personally, too high to chase.
All right, one last one for you before we let you go. Rack Space getting racked today here, and at $45 level looked like it was holding up a little bit in pre-market. How do you treat a disaster stock like this?
Ouch. 44, what was the low? 44, 46 last time. Watch that level. So basically the 42 to 44 level is pretty important for it because of where it broke out from, let's see, in November, and that was the level, and then bounced back down on it in February. So it's important to see how it handles itself there. If not, there's definitely sub 40 is definitely a possibility because it spent a lot of time there last year.
Okay.
So
Nic Chahine, Marketfy Maven. He's the author of Create Income with Option Spreads. Joins us every Tuesday for his intelligent outlook on the markets. Thanks a lot, Nick. We'll talk to you again next week.
all right.
Thank you, Nick.